Hi everyone, welcome to this education tutorial video. In this video, we are about to talk about what is the benchmarking in transfer pricing. Many of my clients have asked me what is the benchmarking in transfer pricing. Mainly they are confused what is the benchmarking because when they are approaching to the consultants for the TP studies and consultants are mainly asking the pricing as per the benchmarking, and they are mostly confused what is the benchmarking actually for the general professionals who are not from the background of tax professionals or not a chartered accountants, not a CPA holders. And for them it is, I can understand it's difficult to understand what is the benchmarking is. I'm trying to explain you the concept of benchmarking so that it can be very helpful in your case. Let's begin. Introduction. Benchmarking is, this is a theoretical explanation. Benchmarking is a process of comparing a company's related party transactions to those of independent enterprises to determine an arm's length price. What happened when you are doing business, when two independent when two independent parties are doing the transactions, okay, they do the transaction at a market rate, okay. But when two related parties doing the transaction when two related party doing the transaction, they can do at any manipulated price to shift their profit from high tax jurisdiction to the low tax jurisdiction for any other reason maybe, okay. It is called uncontrolled transaction because these two independent parties are doing transaction as uncontrolled because there is no control over this transaction. This is at a market rate, okay. But these two related parties can do the transaction at any price without without justifying the market rate, okay, because their main motive maybe is to shift the profit from one company to another company, to shift from one tax jurisdiction to the another tax jurisdiction to save the taxes overall, okay. Then benchmarking is required. What we do in the benchmarking, when we are going to do, this is our company A, for example, okay, we have a company B in India, and we are taking some goods from the company B, from Indian company, okay. Then what happened, I know in India is tax is high. I will tell them, give me the under invoicing, okay, give me the low price goods, and I will book profit in Dubai, and I will sell further to our overseas clients, okay. Like that things we can do. But in benchmarking, what happened? Uh, in benchmarking, we try to search for, try to compare our company with another company which is available in the market, who is in the similar kind of industry, similar kind of goods they are trading, similar kind of services they are doing, and how much percentage profit they are making on their goods services, okay. It can be the any method we can select, okay. Main focus is that we are a auditing company, for example, okay. Auditing company around the world is making 30% profit, okay. For example, my Indian auditing firm is making 5% profit, but my Dubai auditing firm is making 50% profit, 60-70% profit, because I am I'm giving low prices to my Indian company, okay. I'm making profit in Dubai mainly, okay. This can be happen, okay. Then what happened, in benchmarking, I told you, we are trying to make a uh, we try to find a similar kind of companies of us to which we are going to study the TP studies. So it can be a benchmarked, okay. This is the exact word benchmark they used. I hope you understand the thing, okay. Company A is the auditing company, for example, okay. We are going to do study for the company A, okay. Then we go to the global database, okay. We will found a similar kind of auditing company in the world database, okay, okay. And we will adjust something to make a uh, similar kind of circumstances, similar kind of size character sketch of the company. Okay, then we will bring some select companies from the database. Okay, and we will found their things. Okay, how much profit they are making. For example, in global level, similar characteristics of auditing companies are making 30% of the profit. Okay, for example, this company may be making a profit of 10%. Okay, or maybe around 60%. Okay, maybe 30% even also. If 30% is there, we will say it is at arm's length price. Okay, like that. Okay, it will happen. For example, if it is making 10% of the profit, uh, the global company we are getting at 30%. Okay, then what will happen? So authority will say, okay, company A, you should also increase your profit some till 30% to make a transaction at an arm length price. Okay, this kind of things we do the study in the transfer pricing for the benchmarking. In benchmarking, what we do, we go to the global market, global database, and from there we try to bring a similar, most similar kind of companies in which industry, product, services you are dealing. So we can compare that global level diamond companies are making a certain percentage of profit, like 10% of the profit. You are also a diamond companies. Okay, then why you are making 2% of the profit? Okay, if global companies are making 10% of the profit. Okay, so authority can ask. So we will do these studies, and if we found the global database and our company percent profit are within the range, okay, then it is at arm length price. I hope I understand, I able to clear your doubt about the benchmarking. Okay, the purpose of this benchmarking is ensure transfer pricing reflect market conditions and comply with tax regulations. Okay, now the legal framework. Okay, legal framework, you all know article 35 and article 55 is there of federal detail law number 47 of 2022. Okay, which govern the TP regulations and TP documentation. This one is for TP documentation, this one is for TP rules. Okay, transfer pricing with the related parties. OECD guidelines, BEPS action plan 13 is there, which mention the local file requirements, which we already discussed in the earlier videos. And FTA has UAE government has issued ministerial decision number 97 of 2023, which describe the limits 200 million. Okay, or you are crossing the limit. Okay, then you have to maintain the local file and master file. Mainly people confused here. They said, okay, my turnover is below the 200 million, it means I don't need to comply with the transfer pricing. No, it's wrong. Even you are doing the business for a single dirham with your related party, TP is applicable on you. You have to comply with everything. But government has given some relaxation. You don't need to do many things. Okay, you just need to do the this benchmarking studies only. Okay, to justify your transaction, you no need to maintain more detailed documentations like local file and master file at advanced level. Government is giving relaxation from that only. Okay, it is not an applicability limit. It 200 million is the documentation limit. Okay, not applicability limit. Now come to the next part, importance of benchmarking. Why benchmark is important? To ensure arm length compliance. Okay, I just explain you how we calculate the arm length. Okay, so it ensure the arm length compliance, support transfer pricing method justification. Okay, at what method we are using, and what benchmarking we are using. In the benchmarking also we use a similar kind of methods. So we justify that we have used the right method to calculate our arm length price. Okay, enhance audit readiness. We are already ready for the audit. If authority is coming, we are not fear of from the authorities. Okay, if we have the all studies for the benchmarkings. Prevent tax adjustments and tax penalties. Okay, you also know, if authority coming, they found our transaction are not at arm length price. Okay, they can penalize us, they can adjust something in our financial statement which will maybe increase our tax liability, and there can be interest and penalty can be adjusted there. Okay, it will save us from this thing in benchmarking studies. Okay, what is the benchmarking steps? Government has given these 6 steps. Okay, in the transfer pricing guide as well. First, identify control transaction. Then, what are the transactions we are doing? We need to identify those transactions. Maybe service, maybe goods, maybe trademark, royalty we are giving, maybe intangible assets. Okay, we have to identify those transactions. Then we have a two party, right? Uh, uh, one party is giving services to another party. One party is a service receiver, one party is a service provider. Okay, like similar, one party can be the goods supplier, party can be the goods receiver. We have to select the appropriate party to test that one. Okay, we no need to test for the both parties. We need to test only one party. Okay, we have to select the tested parties. After that, we have to select the appropriate transfer pricing method. There are so many methods are given already. Okay, we have to select the most appropriate method which is applicable in our case. Okay, after that we have to select the comparables. It can be internal, it can be the external. Okay, internal can be there, we are selling the same goods or same services to independent parties. Okay, and same service and same goods we are selling to the our related parties. Okay, then we have a internal comparables. Okay, then no need to do the external comparabilities. Okay, because it is more reliable. If you do, you cannot justify that your internal comparable are the enough, most enough to justify your transaction, then you no need to external. Otherwise you must go for the external comparables. For external comparables we will discuss later. Okay, then we have to apply the financial indicators. Profit label indicators can be there, any other can be the indicators can be there. Okay, like service providing service cost may be the indicator. Okay, profit level indicators can be there. Okay, any kind of financial indicator which is most relevant in your case can be there. Okay, then we have to adjust our comparabilities. Okay, maybe some things we found the global database, some companies, maybe there is something we need to adjust. Then we have to adjust those things to make both companies, our company, okay, tested party, and the global database companies are should be at a similar characteristic companies. It should be, then we have to do some adjustments for that. Okay, if there is some adjustment are required. Okay, and these 6 steps we need to follow to do the benchmarkings. Okay, the source of comparabilities, I told you, internal comparability can be there if we have an internal transaction and those transactions sufficient enough to justify our transaction with the related parties, then we should go for the internal comparabilities. Okay, if we are unable to do the internal comparabilities, then we will go with the external comparabilities. Before that, what happened, we need to buy some public databases. There are so many databases providers are there worldwide. You can go with that anyhow. uh, if you do, they charge a huge amount. If you don't want to pay the charge amount to them, you can take our services. We provide at a very reasonable price this benchmarking studies and TP studies. Okay, and UI TP compliance tools, TP Catalyst are there. So many tools providers are there. PLI, profit level indicators, net margin can be, return on invest assets, resale price margin, and documentations are there. Intercompatibility agreements and functional profiles can be there. Okay, these are the tools we required. Okay, benchmarking examples, scenario, intercompany company services between UAE entity and Indian affiliates. UAE company to the Indian company. Okay, it can be there. Method, we can use the cost plus method. And what is the benchmarking? TP Catalyst database with the filters. Industry we need to see, reason we need to see, then function we need to see what are the functions we are providing. Functions should be same. Okay, what kind of functions are there. Okay, best practice, update your benchmarking annually. Use multiple year data wherever applicable. Minimum 3 year we suggest. Okay, document select rational and adjustments. Okay, keep comparable aligned with the functions and risk assets. Okay, conclusions, benchmarking is essential for demonstrating arm length arm length pricing. Okay, benchmarking is most important. Okay, it ensure regulatory compliance and minimize tax exposure. Must be robust, consistent, and well documented. Okay, this is the conclusion. Okay, if we do all those things, inshallah we will be in the safer hand. TP study is important. And what is a benchmarking, many people ask me, so I try to explain in this video. I hope we are able to clear your all doubts. This is the end of this video. What is the what is the benchmarking? Okay, I hope your all doubts are clear. If still you have any doubts, you can email me. This is my email ID, or you can visit our website. Okay, you can log in there, and inshallah we will try to provide you best services. Thank you once again, everyone. Assalamu alaikum.